Hi, today I will show you pound Swiss franc trading using magic levels. So magic levels, what are magic levels? Magic levels are nothing but fixed support resistances. So fixed means they don't change for any FX pair, daily, weekly, monthly, yearly. They are fixed for lifetime. So what is the advantage of the fixed support resistances as compared to indicators or moving averages or Fibo or whatever it is? So the advantage is you will come to know the direction, in which direction the FX pair moves, whether up or down. So if it is moving up, to what extent it will go. Okay, similarly from which point it will reverse. So all these 3 points are clearly known to the trader in advance, right? So if you are using indicators, they won't give you the direction. Similarly the target reversals. Okay, when there is a one side move, indicators works very well. When there is a range bound move, they fail utterly. So here, and you need to watch the positions with a lot of care. You cannot move out of the system while trading with some other methods, right? So here that kind of problems are not there. Once the trade is generated, you can place the stop loss and the target, and you can forget. You can observe the trades once in an hour, 2 hours, or once in 3 hours. Nothing to watch every minute how the position is moving, because most of the time they hit the target with as high as 70% success rate. Right. The risk reward ratio is 1:3, 1:5, 1:6, and 1:10. The risk will be 50 pips per trade, and the target will be 200 to 400 pips. The gap between this yellow line and the another yellow line is more than 400 pips. So now you imagine how big is the target. With 50 pips risk, you are getting 6 times reward. So even if you lose sometimes the trades with 50 pips, nothing to worry. Okay, so here see on 4-hour chart there you could not cross the zone, and if you short here also short, nearly 200 pips done, and the FX pair started reversing, and here there is a good buy generated, and it went up to this zone. So you can observe it won't go straight on crossing one line to the other line. I mean one zone to the other zone. It will move up, down, up, down, up and down, up and down. So whatever the up and down moves are there, we need not worry. Take the position, keep the stop loss, and leave it. So here there were certain zigzag trades. So majority of the times we get exit very near to the cost or entry price. Rarely stop loss gets triggered. Even if the stop loss gets triggered also, we need not worry about it, because even 1 or 2 stop loss, if we lose, it will be 100 or 150 pips. Nothing to worry, because we get a big move. So here buy, sell. See, and even for day traders also, we can trade for 30-40 pips when the price is trading at these levels. Okay, apart from positional trading. So even if we lose 1 or 2 trades, nothing to worry. Just place additional trades and get back that loss. So here also there is a short generated and slipped off very fast. So here also again short, slipped off, retracement, short, nearly 100 to 150 pips done, retracement, short, and done. So sometimes what happens is in intraday the FX pair tries to move up or down the level, but we need not worry about. Here it breached the level, but it could not hit the stop loss. The stop loss is, it just went up around 25-30 pips only. Our stop loss is 50 pips. Okay, so on daily basis we will come to know daily candle. Using the daily candle we will come to know the direction of the FX pair. So in intraday, even if it is moving up and down with 20-30 pips up, nothing to worry. So here another full trade on breaching the level. Again there is a short, fallen, 200 pips done, short, and here there is a buy, so nearly 150-200 pips, and there is a straight fall, and this is the place where it buy generated, another 200 pips done, and it could not move to the next level. Sometimes what happens is it moves 50% and it will come back. So when it reaches around 200 pips, we can book part and move the stop loss to the cost and wait for the FX pair to move up or down. So if it is taking the stop loss, we will wait for the direction and we will take the next entry. So here it is a short and the buy, short, and again done, full target done, 400 pips plus. So perfectly bounced from this zone, buy, so and done the target. So you can see how big trades are generated. So the 3 points are clearly covered, like the direction, destination, reversal. All these things are clearly well and known to us in advance, so we can trade without fear. Okay, second thing is no need to use any kind of indicators or any nonsense on the charts. This is simple, and we need not watch the system every minute, every 10 minutes, 15 minutes, nothing. We can see how the pair is moving once in 2 hours or 3 hours or 4 hours. Take the entry, place the stop loss and place the target and relax. So that kind of peace of mind will be there, and rewards also as high as 200 to 400 pips per trade, not just 10 pips, 20 pips, 30 pips. Small, need not trade for small profits. You can catch very big moves. Okay, likewise one can trade using these levels. Okay, if there is a big news, the movements will be very fast, and if there is no news, they move very slowly. Sometimes to reach 400 pips they take 1 week, 10 days, sometimes 1 month also. So it all depends upon the driving factors. Okay, so the trading with conventional methods like moving averages or indicators or any other FIBO or whatever it is, it supersedes all those things and makes the trading easy, simple and profitable. So one can trade any FX pair, including gold, crude, everything can be traded with just 50 to 60 pips risk, and reward remains 200, 400 pips or 500 pips. If the FX pair is big, the target also will be big. So if anybody is interested to learn the method, just contact me in Telegram. Okay, this is my Telegram ID, ETA NSC MCXFX, or you can send an email also, easytradingnscmcx4x@gmail.com. Okay, right, thanks for watching, all the best.